Hello and welcome to today's video. In today's video, we're going to be looking at the concept of point of interest, but this is the second video under this concept. And we're going to be breaking down the valid order block and refinements. Before proceed, this video is brought to you by PipSiteX and our WhatsApp number is +234-805536-9615, and I, Investor Theo, will be your host for today. Now, without mentioning properly, we should understand fully well that this video is on our YouTube community, PipSiteX. Do not subscribe to our YouTube community, turn on the notification bell so you can notify when we drop another video on this series so you can learn how to trade profitably, and share with your friends so they can also be profitable traders. Let's go in. Now, valid order blocks and refinements. Now, our last video that we did mentioned order blocks, and order block is what some people use as their point of interest. Okay, they draw out zones with order blocks and use them to work with as point of interest. But before you can just throw out any zone in the market, there are things you have to consider, all right, to work with things as an order block. Okay, to work with anything as an order block, there are things you have to consider. So these are the things I'm going to write out for you to consider for you to get in your valid order block. You need to consider number one, the position of the order block, because this is very valid, because the position is going to tell us if the order block is a bullish order block or a bearish order block. If you have your position as a bullish order block, your criteria has to be met. If it's a bearish order block, there are also criteria has to be met. So bearish or bullish. So this is one thing you need to consider. Second thing you need to consider while working with order blocks is if there is an engulfing bar. Right? Again, this can be a bearish engulfing bar or a bullish engulfing bar depending on the order block. And then check if the wicks cleared. All right, check if wicks cleared liquidity. So you can see what I'm typing. Well, let me bring this down. Okay, if wicks cleared liquidity. Now, if your wicks don't clear liquidity, you have to look for the candle that cleared liquidity, how to use it. I'll explain all these things shortly. Just want you to understand that these are three criteria that can help you eliminate fake order blocks and for you to work with valid order blocks. I want to use the word fake because this market is a very dynamic market. So let's just say non-valid at the point of entry, okay, or rather invalid. So let's just say invalid here, order blocks. So things to consider: we have a position of the order block, bullish or bearish, a golfing bar, and check if it's cleared liquidity. So this is our first scenario we're going to be talking about here. Now, this order block here is a valid order block. And why is that so? Yeah, so this other block over here is in a bearish trend. Okay, so this other block is going to be what our source candle for a bearish move. So it's a bearish order block. Understand? So the position of the order block here, this is a bearish order block. You check after the order block, what is the candle after it? Is it an engulfing bar? I clearly see this bar covering it, engulfing bar, and check if the wicks of the other block clear liquidity. From this other block here, it doesn't have wicks to clear liquidity. So we're going to be drawing other block with this particular other block. So basically, you can clearly see this other block. You're not going to draw it from here. If you draw it from here, you might have some issues in the market because of the liquidity that is not cleared from here. The liquidity clearing candle is this particular candle over here. If you want to draw with this other block, you take it to the top, and then you can draw your other block this way, and you can see this is a valid order block. Some people actually, for one of my strategies, I don't even use this candle. I just sometimes take the wick. And anything that makes the market get to the wicks, it means I'm selling from the extreme. And if I'm selling for the extreme, it means I'm selling at a very expensive price and I mean to make more profits. This is one scenario, but with this scenario, you lose some opportunities. Not knows what lose, you miss out on some opportunities to trade. So you can enter like this and then secure more opportunities. But if you just want to refine and refine, you can use the wicks mainly, right, to create your order blocks. So this is one scenario over here. Now, the second scenario over here is this scenario, and it also validates this aspect that I mentioned earlier. Validate that block. You can see the engulfing candle. This is a engulfing candle. You draw it from here and take it out. If the candle cleared liquidity, this is the lowest candle over here. So it definitely cleared everything over here. So people like using wicks to show clearing liquidity. You can also do that, and you can analyze from there. Yes, so I believe I've explained this concept clearly. But this is what I'm showing you with this example here. Okay, this example I was talking about using the week to mark at order block, and yeah, just to give you sniper entries, all those sniper entries and likes, you can work with that. But if you want to refine properly, work with sniper entries cool. But if you don't want to miss opportunities, simply work with the source candle and you move from there. I think it's as simple as that. I think I didn't color this properly. This is a bearish candle, so let me recolor and I will proceed from here. So let me send this to the back so I can color this properly. Alright, so the sharp ones must have observed a change here properly. Well, the same application works there. Just that now this is a bullish move, so this is the bullish order block and it's colored red. You get it. So it's as clear as that. Now, I believe you understand the psychology behind order block by now, because order blocks is literally where the markets directly have a lot of orders, and it potentially comes as a point that interests us as traders. Now, who created the SMC and made us more interested in this? So basically, we heard from several sources that the inner circle trader, that's the RCT, it was one that brought up the order block concept and the likes. But yes, people have been trading this concept all the while. So since we got the publicity from him, it's also cool to actually mention his name over here while learning the SMC. Alright. The reason why I work on these zones is because these particular zones are effective to us as traders, as well as a lot of traders wanting to enter from these other blocks. So why not utilize them to trade too? Simple psychology. Manipulation can also be done here. There's one thing to know. But when you get liquidity, you know how to use the manipulations properly. Alright. When we get to liquidity concept, we'll be learning liquidity later on. You'll learn how to use manipulations of big banks properly to your advantage. I hope you understand. So this is a fake one. The reason why this is a fake one is because directly it doesn't have any bullish engulfing candle. Oh my god, I typed down some points earlier on, they are not on my screen again. I believe you understand that things to consider: the position of the order block, a golfing bar, and wicks if they clear liquidity. Please write them down. Alright. This doesn't have a golfing bar here, so it's just small candle. We cannot see any positive move. So we're not really working with this as a valid order block. So let's go to the charts. This is USD. So I was working on the strategy right here, which we'll talk about later on. This is not with the other block. This is with FVG, and that's fair value gaps. You're working with Fibonacci retracement to fair value gap, and also working with concept of the Gansu. Okay, this is the other block over here. So I utilize everything all in all to create an A plus setup that gave us a 1:2.59. You were seeking more. I have targeted liquidity over here. We were seeking more profits that keep on going. That have kept on going for more profit at the next liquidity zone, the 1:6. But I targeted this liquidity over here, so that was a 1:2.5. Yeah, 2.6, but yeah, you get the points. I'll explain that in future videos once we are done with learning a lot of concept. You can see the way I combined everything to create one setup and got a sniper entry at this point. So I'll take sure to get sniper entries as time goes on. Just stay tuned with this community. Like, you're gonna learn a lot that what you even pay for in some people's courses, you won't even learn there. You'll learn from these videos. So just make sure you stay subscribed and like our videos with the notification bell turned on. Emphasis on that so I can get notified when I drop new concepts. Alright, so let me show you order blocks, value order blocks, and the rest. I have a trend line here, so this might confuse you. This will those of us aren't working with trend lines. I'll just working on some other concept earlier. So let me use a clean aspect of my chart to explain. I think this is clean enough. So this is the chart right now, right? And we want to enter positions. The chart is moving up. So I look for opportunities to what? To buy. And clearly see, let me show you. Chart is moving up. I look for opportunities to buy in the market so we can actually see continue with the trend of this market. Now, how can we find our own aspects, our own opportunities to enter? We look at for order blocks. Right, order blocks are usually at the extreme ends. You can clearly see here, this is an order block over here. It's at this extreme end. Okay, this is the other block I'm talking about. This is it. Why is my candle to showing this? I don't let me color it back. I think it will set because I know I corrected this earlier on. Alright, and take the transparency to 20 so I can see the other block too. So yeah, so this is the other block. Let me zoom in so I can see it. And why is this the order block? The market uses it to clear liquidity. That's to collect money from others that were still in this trade. So this is liquidity that was cleared. Alright, liquidity cleared over here. Okay, you can see it's the lowest candle there. This went to the very very low and collected all the money, all the stop loss of every trader in these trades. Alright, collected all their stop loss, and then this shows our liquidity carry candle. Then after that, for us to validate that it's still another block, the position is here at the bottom. Although yes, it's not showing green, it's not showing red, pardon, also signify that it's a bullish order block. Like I mentioned in our last video, you have to learn some things. A doji, even showing green candle, a bullish candle can also serve as a bullish order block. You just need to understand this position. Alright, so this is where it's positioned. It has an engulfing bar at the top, right, and a clear liquidity. Another concept some people want to use will be this FVG's concepts. Right, you can see this in positive move, all of them positive move all the way up. So that's a crazy point to tell you. And then we have several unfilled FVGs, which we're going to be talking about in future videos. This is the fair value gap, and the rest. A lot of fair value gaps over here. You can clearly see fair value gaps literally every single place. Yeah, that's to tell you that this market pushed all the way up, and then he used this liquidity to foil his move to the top. So he might want to come back down, or it's most likely going to come back down here, so I can actually mitigate these positions that were here, so I can continue going up. I'll explain these mitigations and the rest when we come to liquidity concepts, but and also explain psychology around how big banks trade when we get there. What you need to understand fully well is that right now, so I don't confuse with many concepts at once. Just know that this is this trade, okay? It's clear liquidity, it has a bullish move, that is engulfing candle, and then you should know the positions at the bottom there. So it's that simple, right? So since we've marked our order block, we're expecting market to come back to this zone in the future. And the market did what? It tapped on our order block. How do we enter our trade with order block? This is long position, that's a buy. You come here, our SL is directly beneath the other block. Some of us want to put our SL on other block, this is risky. Some of us want to put our SL directly beneath, which is great. But if you have a defined of putting yourself to go a long way to help you. And then target our TP, our liquidity. So this is the nearest liquidity. This is liquidity over it. Right? Let me explain liquidity a little. So let me show you this. These are zones that the market went to in the past. This one, this is targeting our TP. This another place to target TP. Which other place is there? Yeah, this is another place to target TP. But this one is going to be a small TP. For those of us that use that stop loss, might have something like this. One issue 1.5, the next TP one issue 4.35, the next TP one issue 4.86. So just like this, you'd have gotten one issue 4.86 trade. It's this simple. You can clearly see how clean you sniped in, you got in, and cool. Alright, so this is another example of order block over here. And you can see this bullish move, and then here again you want to go in for another block move. But trying to go in again, this time around the market didn't fill your orders on time. Let me show you. Here the market left you behind. This is the issue using the extreme price. Market left you behind, and then you missed this entire move to the upside. Understand? If you had kept on holding it, saying the market will come back to you, they have been triggered to enter, but then your SL would have been hit. You get the point. So everything has its own advantages and disadvantages. But yeah, when you're working with it, other blocks, you can have a high win rate depending on how you enter your trades, and then maximize gains from the market. It's very, very beautiful, honestly speaking. It's beautiful to enter trades with the other block. And you thank me for this once you start backtesting and seeing how it plays out. Trust me on that. So yes, this aspect has been explained with live charts, and I want to believe you understand it. If you need more examples on other blocks, just go to the chart backtest and keep on getting examples. Alright, you keep on getting examples. The examples are not hidden, they are on the charts. They are literally on the charts. We are going to stay with me to the end of our series. We've seen that many examples of other blocks to be used and show you entries, how the market moves and likes, and how you follow the trends. Right, just make sure that you work with it properly and good to trade. It's that simple. So with that mentioned, okay, let's anticipate tomorrow's video. I will see how the market plays out in tomorrow's videos. Cheers to progress. Do to subscribe, like, and share if you haven't. I'll see you tomorrow. Peace.